Hello viewers, so welcome to my channel. I'm Hasham. So now I'm going to start the next problem number 16 on cash flow statement. So till the last video I have completed 15 problems on cash flow statement. So how to make the cash flow statement according to AS3, Accounting Standard 3, explaining the cash flows from operating activities, cash flow from investing activity, cash flow from financing activity. Each and every point I have explained in detail till the last video. One or two more videos are left on this cash flow statement. Now I'm going to continue, but don't join in between. If you start watching this video till the end, you watch. If you skip in between, if you leave in between, you may not be able to understand. So if you are first time on my channel, I suggest you to visit the playlist of my channel. Select the subject financial statement analysis. Select the topic cash flow analysis. Watch the initial videos, get the complete knowledge about how to make the cash flow statement. Then only you can understand the succeeding problems. Apart from this cash flow statement, apart the financial statement analysis, I have uploaded the videos of number of subjects like financial accounting, cost accounting, advanced corporate accounting, managerial accounting, business statistics, income tax. So many videos I've uploaded. Watch your subject, select your subject, watch the video till the end. Definitely you will gain a lot of command on your subjects. Now I'm going to start the next problem number 16. Before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take a printout, keep it ready and start watching. 16th one. The balance sheet of Messrs. Ankit Traders are submitted as follows. Current assets, cash 20. So last year 1980, current year 1981. So current assets consist of cash, last year 100, current year 20. This will be taken in the last one. Then account receivable, current asset, last year 300, current year 600. Inventory, last year 500, current year 1000. So total current assets are given. Fixed assets net, last year 1000, current year 3000. Then total assets are given. Current liabilities are last year 300, current year 1050. Long term debt, last year nil, current year 1500. Capital, last year 1600, current year 2070. One point is clear. There are no reserves. There is no profit and loss account. That means it is a problem of sole trading concern because the profit is adjusted in capital. Normally profit, every year's profit will be taken in a separate account, profit and loss account or reserves. But no reserves, no P&L account. That means the profit is adjusted in capital. So last year capital 1600, current year capital 2070. So deduct 2070 minus 1600, that is the profit for the current year. That is the starting point we'll take. See here, profit earned during the year 2070 minus 1600. This is the capital. Capital at the end minus capital at the beginning. So 470. Actually all these are rupees in thousands. Rupees in thousands, 3 zeros omitted. So 4,70,000, 3 zeros omitted, 470. Now, next page, some details are given. Drawings during 1981 amounted to 70,000. Drawings means the owner has withdrawn the money for personal use. It will be taken twice. First of all, it is a non-operating item. So it will be added back. Drawings will be added back. Again, it's a expenditure. It's a amount taken by the owner for personal use. It's a financing activity. It will be taken under financing activity, drawings. So twice it will come. First of all, it will be added to profit. And secondly, the drawings will be taken under financing activity as usual. In the earlier problems also we have done. Then depreciation charged 2 lakh rupees. 2 lakh rupees depreciation. It's a non-cash item. Depreciation total. Fixed assets were purchased 22 lakh. Rupees 15 lakh of which was financed via issuance of long-term debt and the balance in cash. Now see carefully. Totally 22 lakh rupees worth of fixed assets are purchased. But out of 22 lakh, 15 lakh rupees are financed by long-term debt. That means there is no cash outflow. We have not paid for this 22 lakh. Out of 22 lakh, 15 lakh rupees is paid by banker. long-term debt. So remaining how much? 22 minus 15, 7 lakh. That 7 lakh rupees are paid by the company, by the business in cash. So when the amount is paid for purchasing fixed asset, it is an investing activity. Amount paid for purchasing fixed asset is an investing activity. So under investing activity, you can see here, investing activity. Purchase of fixed assets 7 lakh. 3 zeros are omitted. So after omitting 3 zeros, 700. So 22 lakh minus 15 lakh, 700. 7 lakh rupees are the cash outflow for the purchase of asset. Right? Next one is prepare cash flow statement. That's all. Not much difficulty in this problem. Easy problem. So first of all, cash flow statement for the year ended 31st December 1981, rupees in thousands. Cash flow from operating activity, profit earned during the year. This is the difference in capital I have taken. Now adjustment for non-cash, non-operating items. Two items are there, drawings and depreciation. We'll get profit before adjustment of working capital changes, 740. Now adjustment for working capital changes, increase in current liability. In the balance sheet it is given current liability last year 300, current year 1050. So increase in current liability will be added. So increase in current liability added, 750. Next one is asset side. Account receivable. Last year 300, current year 600. Increase in account receivable, deduct. Increase in account receivable, minus 300. Similarly, inventory. Last year inventory 500, current year inventory 1000. Increase in inventory, deduct. Increase in inventory, deduct 500. That's all. So 740 plus 750 minus 300 minus 500, 690 is the cash profit from operation before income tax. There is no income tax given. So 690 is the cash generated from operating activities. So one activity completed. 690. That means 6,90,000. 3 zeros are omitted. Now come to investing activity. Only one investing activity is the purchase of fixed asset. Fixed asset. How much? 7 lakh. Actually 22 lakh rupees fixed asset were purchased, but out of 22, 15 lakh rupees are financed by the banker in a long-term debt. Long-term debt. So only 7 lakh rupees we are paying. So 7 lakh rupees cash outflow. Cash used in investing activity, 700 in bracket. Now cash flow from financing activity, only one, drawings, 70,000. 70,000. So 3 zeros omitted, 70. Cash used in financing activity, 70. Over. Now take the total in the second column. 690 minus 700 minus 70. You will get minus 80. You are getting minus 80. That's why decrease. Net decrease in cash and cash equivalent. To this we add cash and cash equivalent at the beginning of the year. In the balance sheet it is given last year cash was 100. So 100 is the cash and cash equivalent at the beginning of the year. Last year's closing will become current year's opening. So minus 80 plus 100, you will get 20. So cash and cash equivalent at the end of the year, 20,000. See the balance sheet, is it 20 or not? Yes, of course. 1981, the cash is 20. So we got 20. That means we have done correctly. This is the correct cash flow statement. It is tallied. We are getting 20 and in the balance sheet also getting given 20. That's it. This is the problem number 16. Now 17th problem I am reading out a number of new points we are going to cover. It's a lengthy problem. See here. From the following balance sheets of X Limited, prepare a cash flow statement. So two balance sheets are given, 31st March 2016, 31st March 2017. So current year is 2017. Equity and liabilities, shareholders fund, share capital. Share capital last year 2 lakh, current year 2 lakh, no change. No issue, no redemption, nothing. Ignore. Share capital, ignore. Now reserves. Reserves and surplus last year 23,500, current year 52,000. Check, is there any detail given regarding reserves and surplus? No, nothing. In the whole problem, there are no details given regarding reserves and surplus. So simply, we take the difference in reserves and surplus as the profit. Difference in the reserves and surplus is the profit. So here, increase. Cash flow statement from the year ended 31st March 2017. Cash flow from operating activity. Increase in reserves and surplus. How much is the increase in reserves and surplus? So 52,000 minus 23,500. 52,000 minus 23,500. 28,500 is the profit, right? Now adjustment for non-cash, non-operating items. Now see carefully. Non-current liabilities, debentures are given. So last year debenture of 40,000, current year debenture is given 35,000. So 5,000 rupees debentures decreased. That means redemption of debentures. Redemption of debenture is an investing activity. So here you can see cash flow from investing activity, financing activity. Take a pardon, it's a financing activity. So under financing activity, cash flow from financing activity, redemption of debentures 5,000. There is cash outflow. When debentures are redeemed का मतलब payment, returning back the money to debenture holders. Company is returning the money to debenture holders. That is redemption. So it's cash outflow minus 5,000. Next comes current liability. Under current liability, trade payable. We will take it under working capital adjustment. Then short-term provisions. Is there anything given regarding short-term provisions? Nothing is given. So we will take short-term provisions also as a current liability. So two current liabilities will treat, that is trade payable and short-term provision. Both are current liabilities and both will be taken in working capital changes. Now come to asset side. Fixed assets. Fixed assets last year 95,000, current year 1,14,500. Fixed assets have increased. Now we want the detail of fixed assets. So fixed assets. The fixed assets are land and building, machinery. The original cost as on 31st March 2016. 2016 means last year. So last year land and building 85,000, machinery 25,000. And accumulated depreciation on 31st March 2016. So accumulated depreciation 12,000, 3,000. So land and building 12,000, machinery 3,000. Similarly, original cost on 31st March 2017, current year. So current year original cost 1 lakh, land and building, machinery 40,000. Accumulated depreciation current year 18,000, 7,500. The details are given. The cost and accumulated depreciation of land and building and machinery. Dividend paid during 2017 was 26,500. So dividend paid is given in the adjustment. It will appear twice. First of all, dividend paid is a non-cash item, non-operating item. Dividend paid is a non-operating item. So here dividend paid 26,500. Again this dividend paid will be taken in financing activity. So here financing activity, dividend paid 26,500. 26,500. Next one is investment costing 20,000 were sold in 2017 for 25,000. We'll make an account of investment here. I'll explain you. Then machinery costing 5,000, of which 1,000 of depreciation had been accumulated, was sold for rupees 6,000 in the year 2017. It is given that one of the machinery was sold. That's why we will open two accounts. One account is machinery account and the other account is accumulated depreciation account. Then provision for doubtful debts charged to profit was 1,500. Actually, provision for doubtful debts, it is already considered in trade payable, trade receivable. While calculating trade receivable, already it is adjusted. So ignore this provision for doubtful debts. Lastly, it is given. Ignore that one. Now we'll take one by one. Now see, first of all, an asset was sold. We have opened the account of machinery. Before opening the account of machinery, we'll see the land and building. The land and building original cost on 31st March 2016 last year was 85,000. Current year original cost as on 31st March 2017 is 1 lakh. So last year land and building original cost 85,000. Current year land and building original cost 1 lakh. So from 85,000 it has increased to 1 lakh. So 15,000 rupees land and building purchased. 15,000 land and building purchased. So investing activity, purchase of building 15,000 in bracket. How you got 15,000? 1 lakh minus 85,000. Now depreciation. Land and building depreciation last year accumulated depreciation was 12,000. Current year accumulated depreciation is 18,000. So last year 12,000, current year 18,000. How much depreciation provided? 6,000. So 6,000 depreciation provided during the year. That 6,000 depreciation here I have taken. Depreciation on building 6,000. How 6,000 building? Last year it is 12,000, current year 18,000. 18,000 minus 12,000, 6,000. So one asset completed building. Now come to machinery account. Because there is a sale of machinery, so I have opened two accounts, machinery account and accumulated depreciation account. See carefully. Opening balance, to balance brought down, opening 25,000, by balance carried down 40,000, closing. Already in the previous problem I told you, machinery is an asset. It will show debit balance. The debit side, to balance brought down 25,000, credit side by balance carried down 40,000. Closing credit side, opening debit side. Accumulated depreciation will show credit balance. Credit balance, the opposite. By balance brought down, opening 3,000, to balance carried down, closing 7,500. So first of all, you should take opening and closing balances in machinery account and in accumulated depreciation account. Machinery account, debit side opening, credit side closing. Accumulated depreciation, opening credit side or closing debit side. After this, 3 entries will be passed whenever a machine is sold. Whenever a machine is sold, 3 entries will be passed. Already in the previous problem I explained you. First entry is sale proceed. Bank account debtor to machinery account. Better you take a notebook and while explaining, write it down. Bank account debtor to machinery account. So machinery account credit side by bank sale 6,000. It is given the machine was sold for 6,000. Machinery costing 5,000, on which 1,000 depreciation had been accumulated, was sold for 6,000 in the year 2017. 6,000 rupees is the sale proceed. So by bank sale 6,000. Second entry will be accumulated depreciation. How much is the accumulated depreciation on that machine? 1,000. So entry will be accumulated depreciation account debtor to machinery account. So accumulated depreciation debit side to machinery 1,000 and machinery account credit side by accumulated depreciation 1,000. Depreciation on machines sold. 2 entries over. Now third entry will be profit or loss. Now we have to check what is the book value and what is the sale proceed. Actually the cost of the machine which was sold was 5,000, on which depreciation provided is 1,000. So 5,000 minus 1,000, 4,000 is the book value. The cost of the machine was 5,000, accumulated depreciation on that machine is 1,000. So 5,000 minus 1,000, 4,000 is the book value and it is sold for 6,000. The 4,000 rupees worth of machine was sold for 6,000. So 2,000 rupees profit on sale of machine. 2,000 rupees profit on sale of machine. So entry will be machinery account debtor to profit and loss account. The entry will be machinery account debtor to profit and loss account. So machinery account debit side to profit and loss account, profit 2,000. 2,000 is the profit because book value 4,000 sold for 6,000. So 2,000 rupees profit to P&L account profit. After this, find out the balance. Debit side total 7,500 plus 1,000, 8,500. Now 8,500 minus 3,000. So depreciation is 5,500. So current year's depreciation on machinery is 5,500. This 5,500 will be taken here. Depreciation on machinery 5,500. So only after preparing this machinery account we come to know that there is a depreciation of rupees 5,500 on machinery. Now come to machinery account. Credit side total 47,000 is the total. From 47,000 deduct 25,000, deduct 2,000, balancing figure is 20,000. This is the purchase. 20,000 rupees worth of machinery, new machinery is purchased. That means one machine was sold, the other machine was purchased. The machine which is purchased is for 20,000. The machine which is sold is for rupees 6,000. Now both this will be taken under investing activity. This is cash flow from investing activity. The purchase of building already we have seen. Now purchase of machinery 20,000 here. Purchase of machinery 20,000. Sale of machinery 6,000. 6,000 is this one. Remember, when we purchase, cash outflow, so bracket. When we sell, there is cash inflow, That's why without bracket, positive, right? So machinery. And now one more point is that profit. Profit on sale of machine, that will be deducted non-cash, non-operating income. Here we have written adjustment for non-cash, non-operating items. Items means it may be income or it may be expense. Expense without bracket and incomes should be deducted. That's why in bracket. Incomes should be deducted. The one income is profit on sale of machine. So here profit on sale of machine minus 2000. Minus 2000. That's all. So all the items of machinery and accumulated depreciation I have taken here. Now investment. Now investment you see. So in the balance sheet it is given non-current investment 50,000 last year, current year 30,000. So I have opened the account, investment account. To balance brought down last year 50,000, current year by balance carried down 30,000. The beginning opening balance debit side, closing balance credit side. Now it is given in the last line, investment costing 20,000 was sold in 2017 for 25,000. 20,000 rupees is the cost of the investment which is sold for rupees 25,000. The entry will be bank account debtor to investment. Bank account debtor to investment. So investment credit side by bank sale 25,000. So how much is the profit earned? 5,000. Because 20,000 worth of investment are sold for 25,000. So 5,000 is the profit. So debit side to P&L account profit 5,000. Profit 5,000. Now both the sides are equal, 50 plus 5 55, 25 plus 30 51. Account is closed. Now this sale of investment, it is an investing activity. So investing activity, sale of investment 25,000 here. So when there is sale of investment, it is cash inflow. That's why without bracket. And the profit on sale of investment will come in the non-cash, non-operating item. Profit on sale of investment minus 5,000. It is coming from you. Investment completed. Now after investment, we have current assets. Current assets already we know. Current assets will be dealt in non-working capital adjustment. So increase in reserves and surplus we have taken. Dividend paid. Profit on sale of investment from here 5,000 I have taken. Deduct. And profit on sale of machinery 2,000. If there is loss without bracket, loss will be added to profit. And income should be deducted from profit. This income on sale of investment, income on sale of machinery should be deducted. Depreciation on building 6,000, depreciation on machinery 5,500. That's all. Take the total. 59,500 is the operating profit before working capital changes. Now adjustment for working capital changes. Increase in inventory. Increase in inventory is increase in current asset minus. Increase in trade receivable again minus, because inventories and trade receivable both are current assets. Increase in current asset should be deducted. Next, increase in trade payable, increase in short-term provisions, increase in current liability should be added. So whenever you make adjustment for working capital, remember the rule. Increase in current liability, decrease in current asset should be added. Increase in current liability should be added. So increase in current liability added. Similarly, decrease in current asset should be added. But there is no decrease, there is increase. There is increase. That's why I am deducting. So 59,500 minus 8,000 minus 10,000 plus 8,000 plus 1,000. 50,500 is cash profit from operation before tax. Income tax is not given. So cash generated from operating activity 50,500. This is the cash generated from operating activity 50,500. Cash flow from investing activity. In this case we take purchase and sale of building, machinery and investment. These investing activities are those activities which are concerned with acquisition and disposal of fixed assets and non-current investments. So here purchase of building 15,000. No need of any account. Directly by seeing the value of building last year, current year. Last year 85,000, current year 1 lakh. So 15,000 building purchased. Purchase of machinery, we got it from here, 20,000. Then sale of machinery, we got it from here, 6,000. And sale of investment, 25,000, we got it from here, 25. So minus 15,000, minus 20,000, plus 6,000, plus 25, minus 4,000. Cash used in investing activity. Now last one, cash flow from financing activity, debentures. Debentures were redeemed for 5,000. So 5,000 in bracket. Apart from the dividend paid, twice it will come. Already we have taken here dividend paid. Again dividend paid. Both are cash outflows. Redemption of debentures and dividend paid. Outflow. Bracket. So outer column. Cash used in financing activity 31,500. Over. Now take the total of the second column. 50,500 minus 4,000 minus 31,500. You will get 15,000 positive. 15,000 positive. So net increase. Net increase in cash and cash equivalent 15,000. Now cash and cash equivalent at the beginning of the year. That means from last year. So last year, what is the cash and cash equivalent? See the problem, it is 45,000 given. 45,000 given. Cash and cash equivalent last year 45,000. So I have taken 45,000. Now you add up 45,000 plus 15,000 is 60,000. This 60,000 is the cash and cash equivalent at the end of current year, 2017. Now check whether we have done correctly or not. So by calculations we got 60,000. If you refer the problem, again you got 60,000 here also. That means our calculations are absolutely right. In this problem, many new points I have covered up. You may not be able to understand in the first glance, first watching itself. So watch the video twice, thrice. Definitely you will get the command on this type of difficult problems. So I have completed 17 problems on cash flow statement. So if you are satisfied with my lecture, give a like to the video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And lastly, don't forget to subscribe my channel if you have not yet subscribed. Inshallah, we'll continue the next problem in the next video.